Hello everyone. We are the Stock Up Finance team, your fundamental analysis experts, back again with yet another video on the concepts of finance. Today, we are going to discuss one of the most fundamental concepts in corporate finance and investment banking, that is the valuation and what are the different types of valuation. This video is going to help you in answering the questions, the basic questions asked in investment banking and other finance interviews. So this video is very important and relevant for a student of finance, a junior professional looking to enter into the investment banking industry, and new investors who are entering into the stock markets. Because these are the people who are often going to hear about the valuations, what are the different types, and how they can quickly value a company. Specifically for the interviews, you would be expected to give a very crisp and a perfect answer. And for that, this video is going to help you in framing your answers along with other videos that we are going to put in. What is valuation? It is the process of finding out the economic value of an asset or a business. It is useful to find the present market value of the company. It is mostly required while buying or selling a business, where a buyer of the business and the seller of the business or an asset agree to the common value of the business, which is calculated through valuation. Else, it is usually required when funding of the business and when a stock market investor is looking to invest in the company or any other investors are looking to invest in the company. There are multiple methods to value a company, but there are three primary methods and the most used ones, which are the discounted cash flow model. This is an intrinsic value approach where the valuation of the company is derived from the cash flows of the company, since it is intrinsic in nature. The second and third are comparable company analysis and the precedent transactions. These are the market value approaches, or in other words, the relative methods of valuation, where the value of your company is dependent on the value of other similar businesses in the industry. Let us discuss these approaches in further detail in the next slide. The first method is the discounted cash flow model, which calculates the intrinsic value of the company. The method focuses on calculating the value based on the future cash flows of the company. The first part of the process is to project the future cash flows of the company and then discount it at the cost of capital to get the present value of those cash flows. Now, this method might have an accuracy limitation because it totally depends on the assumptions that are taken while projecting the future cash flows. Hence, a more robust model would have the more robust assumptions. The second method is the comparable company analysis, which is a relative valuation methodology in which we determine the value of the business based on the value of its peers or other businesses in the similar industry. Now, here we identify a list of peers which are operating in the same business, in the same geography, and have almost a similar size as our company, and look for all publicly traded companies. We take their multiples such as EV by EBITDA, EV by EBIT, or any other multiple, and a median of these peers is multiplied by the EBITDA of our company to give the total value of the company. The third method, the precedent transactions, is also a relative valuation methodology approach in which we determine the value of the business based on the value of the businesses that have already been sold in the industry, right? From the previous transactions that have already taken place in the industry. What we do here is we identify a list of transactions that have happened in the industry over a period of time, and then we take a average multiple or median multiple EV by EBITDA from all those transactions. That multiple is multiplied by the EBITDA of the target company or the company we are valuing. The end result is the value of the company that we are looking at. So these were the three main methods that you can use to answer in your investment banking interviews. And there are other methods as well, as you can see on your screen. Apart from this, we are going to keep making videos on interview questions and other aspects of investing as well, where you can enhance your financial knowledge. So do keep following us. So that's all for today on the financial statements, and we will come back with more advanced financial concepts. If you like the video, do subscribe to our page. Keep following us. Thank you.